Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on the world of big business. Today we are diving into a filing that might seem a little dry at first glance, but it actually tells a pretty interesting story about filling up the corporate coffers through stock sales. It's all about how Digital Realty Trust is preparing itself for future funding needs. So what exactly is going on here today? We are looking at a current report filed by Digital Realty Trust Inc. and its operating partnership Digital Realty Trust. LP, this report is essentially an update to the public about important company events that are happening right now. The big news dropped on the 17th of February 2026. This filing is mostly about them replacing an old document that was about to expire with a brand new one. Think of it like renewing your driver's license, but for a company's ability to raise money by selling its stock. This document, the Form 8K, is used to announce major events that shareholders should know about. In this case, the main event is about their ability to sell more of their stock in the future. Digital Realty Trust is a big player in the real estate world, especially with data centers. They have common stock traded on the New York Stock Exchange under the ticker symbol DLR. They also have different classes of preferred stock, which are like special kinds of shares, also traded on the NYSE. Now let's talk about what this filing is really about. They filed a new automatic shelf registration statement on Form S-3 ASR. This is a mouthful, but what it means is they are getting themselves set up to potentially sell a lot more stock over time. It is like filling up a pantry with ingredients for future meals. Their previous registration statement was set to expire in March of 2026. So they needed to get this new one in place before that happened. This new registration statement became effective on the 17th of February 2026. This gives them a fresh window to raise capital. The old one was terminated. Along with this new registration statement, they also filed an ATM prospectus supplement. ATM stands for at the market offering. This is a way for companies to sell their stock gradually over time directly to the market, rather than in one big chunk. It's a flexible way to raise money as needed. This supplement is related to an ATM equity sales agreement they have with a whole bunch of banks and financial institutions. These institutions act as agents, pretty much helping them sell the stock. Think of them as the sales team for Digital Realty stock. This agreement is called the sales agreement. Now here is where it gets interesting. Before the old registration statement expired, they had already sold a significant amount of stock using this agreement. We are talking about over $1 billion worth of their common stock. That is a huge sum of money, showing there is a lot of demand and willingness to invest in digital realty. And guess what? With this new registration statement in place, they still have nearly $2 billion worth of common stock available that they can sell through this program. That means they are keeping their options open to raise a lot more money if they see fit. This really tells us they might have big plans or need to cover future expansions or even debt obligations. To back up all of this, they've included an opinion from a law firm called Venable LLP. This is a legal document stating that the shares they plan to offer and sell are valid. It's like a stamp of approval from their legal counsel, ensuring everything is on the up and up. So, what does this all mean for Digital Realty Trust? It signals a proactive approach to managing their finances and ensuring they have the capital to grow and operate. By having these shelf registration statements, they can quickly tap into the equity markets when opportunities arise or when they need to refuel their war chest. They are essentially keeping a strong financial lifeline open. This filing also includes a cover page in an interactive data format. This is for financial regulators and analysts who need to quickly extract key information. It's all about making the data more accessible for those who need to crunch the numbers. Now let's put on our investor hats for a moment. Digital Realty Trust is in the business of owning and operating data centers. In today's digital world, data centers are absolutely critical. Think about cloud computing, streaming services, online gaming, artificial intelligence. All of that data needs a place to live and be processed. So the demand for data center space is only going to keep growing. The fact that they are filing to be able to sell up to another nearly $2 billion in stock shows they are thinking ahead. They likely have plans for expansion, acquiring new properties, or upgrading existing ones to meet the demands of their clients. This kind of preparation is usually a sign of confidence in their future prospects. They are making sure they have the money to execute their strategic vision. However, there is always a flip side when a company plans to issue a lot of new stock. It can sometimes dilute the ownership stake of existing shareholders. Dilution means that each existing share represents a smaller percentage of the total company. While this is a normal part of corporate finance, especially for companies that are growing, it is something that investors should always keep an eye on. The key will be how they use the money raised. If they invest it wisely in projects that generate strong returns, the dilution can be well worth it. If they don't, it could be a drag on per share performance. Looking at the broader market for data centers, it is a competitive space with major players like Equinix, Cyresone, and others also vying for market share. Digital Realty's ability to raise significant capital positions them well to compete and even expand their market leadership. Their focus on having this funding in place ahead of time suggests a strategic advantage, allowing them to act swiftly on acquisition opportunities or development projects without being constrained by lack of funds. In conclusion, this filing by Digital Realty Trust is a clear signal that they are preparing for significant future activities, likely involving expansion and growth. Their proactive stance in ensuring access to capital through equity offerings is a strategic move that positions them advantageously in the dynamic data center market. While potential dilution for existing shareholders is a factor to consider, the sheer scale of the planned future funding suggests confidence in their ability to generate substantial returns on these investments. It's a company that is clearly playing the long game. Alright, that is our breakdown of Digital Realty Trust's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.